He is author of the Newcomer Substack, joins us now. Eric, good to have you. I see Rivian sort of as this 1 in 1,000 shot priced like a 1 in 10, but how is that any different or not different from some of the other plays, ones that you mentioned, but even some of the other stocks in this meme stock era?
Yeah, the euphoria around Rivian keeps making the bear case easier and easier. I mean, it's pretty simple. You know, it's a company that's producing cars that hasn't delivered many of them, hasn't promised like 1,000 this year, is waffling between whether it will generate $0 or $1 million in revenue this year. It's a company that's losses are going to have to accelerate. Yes, it's going to raise a ton of money in this IPO given the pricing, but the amount of money that car companies spend is enormous. So building up the kind of scale requires excellent execution. And so, you know, there are lots of businesses where you can get really sucked into the story. But the problem with car companies is, you know, they have to deliver quarter after quarter on a fundamentally low margin business that requires a lot of operational excellence, some of which you just have to learn over time. Even if you're the smartest new car company around, it just takes time to figure out the process, learn from your mistakes, and deliver.
Right, Eric, and I think that's key, is that making cars is a very expensive, capital-intensive business. And the fact that this company could go public with a valuation of more than $100 billion today, that's a risk in and of itself, because even though it is raising tens of billions of dollars or has raised that much, it needs to continue to raise money. So any further bad headlines could hurt the ability, when it's a public company, to raise more money in the capital markets.
Right. I mean, I was looking, you know, at Ford, which I think, you know, Rivian is now on track maybe to have a larger market cap than Ford at this point. But, you know, Ford's costs and expenses for its automotive unit came to $117 billion in 2020. I mean, the beauty of a functioning car company is that they have a lot of revenue to offset those costs and expenses. And so then, you know, they only lost 1.2 billion, right? But you need to have the revenue coming in to cover the spending that you're going to have to do to operate a car company. I mean, Tesla's cost of revenue in 2020 was $25 billion. So given the initial projections for the IPO, that's more than the $17 billion that Rivian thought it would have on hand after this whole process. So you just have to think, if it's going to operate on the scale of a Tesla, compete with Ford on market cap, and not have the revenues to cover the expenses, this is a company that at scale is going to have to burn a lot of money to deliver on what people want here.
Yeah, Eric, as we await that first trade, indication is at $122 a share. I have to ask, though, what do you think is going to be the catalyst that is going to cause this bubble, as you describe it, to burst? And what do you think the impact could be outside of Rivian itself?
Yeah, I mean, it's, you know, Tesla obviously has been the most fascinating stock to watch this whole period. And, you know, defenders of Rivian would say many of the things that I'm sort of arguing against Rivian, you could say about Tesla at the time. So obviously, you know, Tesla is an electric vehicle company that's proved to people over time that it can deliver on some of what it promises, continue to grow, and excite investors. But, you know, Tesla is an extremely valuable company. And part of the reason I think we're seeing this euphoria around Rivian is the multiples that Tesla trades on. And the reality is that there's more competition now, right? I mean, traditional automakers are getting in on this. Rivian's adding to the competition. So yes, there's a desire from the public, from governments. I mean, I certainly believe in the move to electric. It's not like I don't believe in electric vehicles, but it's just a competitive space that lots of players are going to want to compete in. You know, people were excited about airlines at one point, and then it turned out, you know, you just have a lot of airlines and it drives down costs. It's good for the consumer, but it's bad for high market cap companies. And that's the risk here. In terms of huge events, I don't know. You know, it's just like, it's hard to guess when the music stops, and anyone who's been saying that it's all going to stop, you know, would be wrong. So I'm not going to say what ends it, but it could happen someday.
Right. And you know, investors, retail investors getting into the stock right now, increasingly paying a lot for the probability that Rivian will make it. As you say, Eric, only one Elon Musk in your piece.
Right.
Thanks. We'll talk to you again soon. And we will continue to stay all over this IPO as we watch that opening trade with an indication for that company to open at a market cap of more than $100 billion, indicated right now at $120, John.
Yeah. Well, the music always stops eventually.